All right, guys, welcome to another episode of the Limitless Mindset Podcast. I wanted to pop in here, and today's going to be a little bit different, guys. We're not doing any interviews with anybody. Today is going to be kind of a two-part thing. I want to talk a little bit about what's going on in the real estate market here in Arizona, honestly, and across the country. It's been a hot topic over this past week, so I want to address that, kind of what's going on, what you guys can expect. And then also the second part of this is going to be tailored towards real estate professionals, realtors, probably some lenders would get some value out of some of this too, on what you guys need to be doing over the next 6 to 8 months to stay relevant in this industry during a market shift. All right, guys, so to get into it, here's what's going on in the market, guys. I just wanted to address this right now. I'm seeing so much misinformation out there. Oh my gosh, the market's crashing. It's the end of the world. You guys turn on the news. You guys see every headline out there. It's all cumbersome. And guys, you know, the reality of this is as with anything in life, you're going to have people that are reactionary and you're going to have people that actually look at stats and data. I don't know about you guys, but I'm a stats and data guy. I don't really lead decisions with emotion. I look at things, you know, especially if you're in business, being in the business that I am in a real estate business. I own rental properties. I invest in properties. Clients hire me to make sure that they're making the best decisions when it comes to buying and selling homes. This is my job, so I'm obviously immersed in it day after day. So I let the data do the talking. Like I said, I don't get too emotional when it comes to real estate. Numbers are numbers. Facts are facts. What's going on in the economy is what's going on in the economy. These are all things that neither you nor I can change. So all we can do is look at the data and make our decisions based off of that. So here's the thing, guys. The reality of this is the market is not going to crash. I think what happens, too many people got used to this hyperinflated market that we've been in for the last 2 years, and they have now, in ways, have, looked at this as the new norm, and that's just not the reality. That's not what a real estate market looks like. That's not a traditional market. I can tell you guys something. When I got into real estate back in 2015 and we were listing properties, I can tell you right now that if I had sold a house in the very first weekend, I would almost have pissed off sellers, right? They're like, you sold my house too cheap. It went way too fast. I knew we should have priced it higher. Like, they're almost disappointed if it's sold in a weekend, guys, which is kind of funny because here we are full circle now. And, the things are, if it takes longer than a weekend to sell, the seller's pissed off, and guys, you just have to take your emotions out of this. You guys have to understand what is going on. Every market is cyclical. Every market goes up. Every market goes down. It's totally normal, guys, especially for those of you guys that have been around a long time, a lot longer than I have, right? You guys, some of you guys have been buying and selling houses since the 60s and 70s, and you should not be surprised by this. So here's the deal, guys. Going into 2019, we were already semi-undersupplied on inventory. And just so you guys know, I'm going to speak to the Phoenix market because that's where we are at. This is where we operate. This is where we do business at. And in the Phoenix market, in a normal, healthy market, guys, we were seeing, 19,000 was considered low, 22, 23 to 24,000 active homes on the market at any given time. These last years, guys, leading into the beginning of the year, we had 3,500 houses on the market. We were way under inventory, which is what created an auction format of the housing market. That's where you guys put a house on the market, you're getting 5, 10, 15, 20. I had one property I had listed earlier in the year, guys, that had 52 offers on it back in February. That is extremely unrealistic, and that is not a sustainable housing market. However, most people think that now that is going back to normal, which ironically, we had so many people that said, I can't wait for the market to level out. I can't wait for things to normal and slow down so I can buy a house. Here we are. And these are also the same people now saying the market's crashing, and that's their new excuse for not wanting to buy or not wanting to sell. Guys, you have to take the emotions out of this stuff. You guys have to look at this from a logical perspective when you guys are making decisions, especially when it comes time to buying and selling a home or any other thing that's going on in the market right now, guys. It's a supply and demand issue. So with that being said, heading into 2019, we're already undersupplied on homes. Phoenix is a hot spot. There's a ton of growth out here. Our market is booming as far as jobs, as far as affordability for other surrounding states right now. So we were already heading into a tighter supply. 2020 hits, and for those of you guys that were in the real estate market, buying or selling around the time that COVID had hit, which was going into March, right into April, things were still pretty hot. They were warmed up, and then COVID hit. And I can tell you guys from experience that week, 4 houses that we were under contract on, they all canceled on me, 4 of my listings. which was to be expected. There was a lot of market uncertainty in that. So what did the Feds do? The market starts to slow down and stall, and everybody's kind of freaking out like, oh my gosh, we're going to head into a recession. That's the day the stock markets took a crap, and everybody was freaking out about it. And then what did the government do? They came in and said, okay, we're going to put some stimulus plans in place here to help people, right? So that came in the form of many different things across many different ranges. One of those being they dropped interest rates dramatically low, guys. We were talking, we got down into the twos for a while there in 2020 going into 2021, 2% interest rates, which is a historical low, but they did that on purpose to stimulate spending, and they made it almost irresistible for people not to buy a house, and it boosted affordability. Mind you, this was already taking place in a market where we were extremely low on inventory. So what happens when you're low on inventory? You got more people fighting for houses. It's going to bid houses up. Then what happens when you drop interest rates down and make affordability even more affordable for people? Guess what? Now that causes an even greater supply and demand. Houses get bid up even more. And then what happens with COVID, when construction can't happen, you can't get supplies, can't get materials, so there's no new builds entering the market. So what happens to the resale market, guys? Prices go up even further. So it was almost a perfect storm of things that were happening. Combined with that on the COVID side of things, right? A lot of people weren't required to return back to the office. They were working from home. A lot of jobs said, man, we don't really need this office. We don't need the overhead on this property right now. Go ahead, employees, go ahead and stay home. We're not going to have you guys come into the office to work anymore. We're going to go ahead and save that overhead. You can keep your job. Well, guess what? Now that they don't have to drive into an office, their home does not have to be tied to a geographical location within vicinity of their office. They can go move. We saw a lot of people relocate to Arizona because they were able to maintain their jobs, through telecommuting and working from home in other states, keep that salary, but move to a more affordable place, which was AKA here, guys. Guess what that does now? Causes an even greater supply issue that we're running into, which is going to push the housing prices high, guys. So it was a multitude of things that were causing our housing prices to go through the friggin' roof. Great news for sellers. If you guys bought a house back then, early 2020, you guys all you made a killing on appreciation. I know I did with some of our rental properties. I know a lot of my buyers that bought houses going into 2019, 2020, before that, they saw great appreciation. But you guys have to understand that was not a normal market. That was a small blip. That was a kind of like an anomaly in the real estate market. It's never happened like that before, aside from 2008, which was a completely different environment where, again, you were able to get loans for cheap, very easy. You hardly had to qualify for loans, and people were buying multiple houses because they were hedging on the real estate market as an investment, with able to get loans basically if you just had a dang pulse, right? Even though they on paper couldn't qualify for these loans. There wasn't as many checks and balances as there are in this market, guys. And then I want to bring up another thing that is also absolutely driving our market, which is kind of the dark horse, which is the hedge funds that were in here buying up all of these rental properties, right? As the stock markets start to plummet, it's not considered a stable ROI for investments. Hedge funds roll their funds over into real estate, the single family homes. The majority of what they were buying out here was that, $550K down, 3-bed, 4-bed home, no pool, no solar, which ironically, guys, that's like your first time starter home, right? That's what they're buying right now. They were buying up so many houses. So again, that market got super competitive. So as you guys are seeing, it's a lot of things that were contributing to our housing supply just completely drying up, which as supply dries up, housing prices go up as well, right? Supply and demand, guys. So you guys have to understand this. It's not that our market was doing amazing. It was doing great. Guys, it was just, we were extremely undersupplied, right? What we're experiencing now is on top of that, which we're going to talk about here, is the Feds basically pumped trillions of dollars into our economy. People weren't required to make their mortgage payment for 6 to 8 months. They were able to just tack it onto the end. So they took that money and they spent it on other things. There were stimulus programs in place to help people get through. And then again, the Feds dumped trillions of dollars into our economy, which increased spending, which shot inflation through the roof as you interjected all this extra money into it. Interest rates were dirt cheap, affordability was high, and honestly, guys, on paper, people felt like they were richer than what they really were. They were spending money that they probably shouldn't have been spending in an environment like that. It pushed the prices high, guys. So what's happening now is that was not sustainable, guys. Everybody has to understand that if you take the emotion out of it and you stand back and you say, okay, on that trajectory of prices rising as fast as they are, everything being as expensive as it is, gas hitting $6, how high can we go? How high can we push this thing before it just snaps and crumbles, right? So this is where the Fed steps in and says, okay, we're going to do our thing and try to slow this down. Well, what do? They slow it down by bumping interest rates up to basically get people to stop spending money. That's what it is. We're going to stop spending money. And when people stop spending money, prices come back down. And that's what curbs inflation, guys. So you have to understand that what is happening right now is, number one, it's necessary. Number two, it is all by design. This isn't something that just happened. It's not just something that people woke up one day and said, oh my God, the housing market's crashing. That's not the case, guys. Interest rates have been doubling because, again, people are trying to slow the inflation down. Ironically, the inflation that they created with all these stimulus programs and money that they pumped into our system. So what does that mean? What's going to happen to the housing market, guys? Now that we have diagnosed how we got here, what's going on, what to expect, is the market going to crash? That's what everybody's freaking out about. Should I buy now? Should I sell now? Should I sell my house now? Is the market going to completely tumble? I'm going to lose all my equity. Should I buy and, should I not buy? What if the market, goes down? Here's the thing, guys, the market's not going to crash. I'm going to share something with you guys. So as of today's June 25th, there is just under 14,000 active listings on the market. Out of those 14,000 active listings, just under 12,000 of those are single family homes. Now, if you guys remember what I was telling you, in a normal market in Phoenix, we're like 22 to 24,000 houses actively on the market. We're not even halfway there, guys. Not even halfway there yet, just yet. We're barely halfway. So you guys have to understand that. What feels unusual right now, as in seeing a house sit for a couple weeks on the market, seeing some price reductions, guys, if you completely cut out the last 2 years out of the housing market and you go back to, 2010, 11, 12, 13, 14, 15, 16, 17, guys, houses sat on the market for 30, 60, 90 days. Some of them didn't even sell. A lot of them would do price cuts. It wasn't unusual to see seller concessions. That is a normal real estate market, guys. What you have experienced in the last 2 years is not normal. So if you're comparing what's happening right now to the last 2 years and you're assuming it's crashing, no, what's happening is it's adjusting. It's adjusting by design. Again, people are, the feds, aka the feds are raising the interest rates to slow things down right now. I'm trying to slow down the inflation. Otherwise, things are going to get out of control and get even more expensive. It's not a win-win for anybody, right, guys? So you got to slow it down. So what's happening now is things are leveling out. Here's what you guys can expect. I don't expect housing prices to come down or drop. I'm just going to be very honest with you guys. They're not going to drop. You're going to see some price cuts, but those are mainly from the people that are overpricing those houses. A lot of agent strategy and a lot of seller strategy these last couple of years was, if my neighbor's house sold for $550, I'm going for $600, or I'm going for, $580. If whatever their price was, I'm going higher than that. And sometimes they would get it, honestly, with such a, short supply of inventory. You can basically name your price. Well, guess what? That's going to get back to the way things used to be now, where the sellers don't have as much control. They don't get to just say, here, buyer, write me a blank check. I'm going to, fill this out. It doesn't work that way, guys. So with that being said, though, we're still undersupplied. We still have a shortage of homes on the market right now. Not enough new builds are being built. We still have a massive backlog in the supply chain that's causing, delays in building, delays in remodels. So we're still there, guys. We're still in a shortage right now. Again, sellers, as of right now, sellers do still have a stronghold on the market. With that being said, I do think it's going to balance out. Probably come, I would say, August. I would guess we're probably going to be touching about 18 to 19K homes on the market if we go at this current pace that we're going at, which is going to put us close to a balanced market by that point. Again, doesn't mean we're crashing, guys. It just means the market is adjusting exactly what it should be. It cannot continue to go on this growth appreciation curve indefinitely. It's completely impossible. We've had a massive run over the last, I think we had like 120 something months so far of positive growth in all these homes, guys. So you guys have to understand that right now. So again, what to expect? Well, here's what you can expect. You're not going to see a lot of sellers get away with listing their house, 20, 30, 40, 50K over the comps. That's probably not a good strategy. I wouldn't recommend that. I'd recommend pricing your home where the market says it should be priced at. Agents, you guys are going to be looking at a couple different things. You guys are going to be looking at not just closed comps, because here's the problem is a couple of sales from 4 or 5 months ago, you got closed sales that were a little bit higher than what they should have been, because maybe there's an extreme shortage in that neighborhood. You got to look at what's actively on the market, who you guys are going to be competing against, right? As inventory builds, that's going to kind of cause the flow of where your guys' listing pricing should be. Who are you guys competing against? When those houses close, there might have only been 2 other houses for sale. Now there might be 14 for sale in that neighborhood you're competing against. Houses going in a weekend are probably not going to be happening. So if you guys, for example, you guys have a new build under contract and maybe your strategy was, okay, we're going to go and get our current house sold about 60 days before that new build closes, and it'll close just in time, and then we're going to get a lease back for 30 days. Probably not a good strategy, guys. It's going to take a while for that house to sell. It's probably going to be we're going to see common houses sit on the market 30, 60 days, maybe 90 days. So I would stretch out that timing a little bit more. You're going to start seeing seller concessions come back. And what that means is you're going to see where a buyer puts an offer in and then ask the seller to give them some concessions. A common one right now with interest rates being as high as they are, they might start asking sellers to give some concessions to put towards their interest rates to buy down some points to get that interest rate back to an affordable level. I do suspect interest rates are going to come back down. They're high right now. Once the inflation is curbed or once it starts to slow, I do expect the Feds to basically lower the rates back down. It's going to be, on their end, which in turn is going to cause the housing market interest rates supposedly to come down, which we do project. I mean, is it high right now? 6.5%, 7%? Sure. I guess you can consider that high compared to what we have seen over the last couple of years. But keep in mind, over the last decade of interest rates, 6% is actually pretty dang normal. Back when I bought my first house in 2009, my interest rate at that time, and I had a great credit score. I was a first-time home buyer. It was like 6.4%, I think, at that time, which was considered an absolutely phenomenal deal. So for being a first-time home buyer. So just things to take into consideration, guys. You guys can't gauge what is going to come back down the pipeline when things level out to what was happening these last 2 years. The last 2 years, you almost have to throw that out of the window because that's not a normal housing market. Days on market wasn't normal. Housing, year over year increases wasn't normal. None of that stuff was normal, guys. So just please get that in your head. I'm making this because I see so many posts over the last, couple weeks of just so much misinformation out there. People not understanding, the general supply chain, the general economy, not understanding how inflation works, not understanding. I mean, here's the deal, guys. Any time is a good time to buy or sell. Even right now, there's a great time out right now to go buy. Are prices going to drop? Nope. Are they going to level out? I still think they're going to increase probably another 6 to 10%. If I had to guess over the next year, it's just going to happen slowly. We're not going to see a 20 or 18% increase like we've seen these last couple of years, year over year. But here's the thing, guys, go buy the house, but get in the house and the interest is high. And guess what? When the interest rates come back down, refi into a lower rate, guys, because you're still losing money by renting or doing whatever you're doing, basically sitting there waiting for, the time to go on, because the house most likely is going to be more expensive. The prices I project are still going to continue to go up for those quality houses that are being put on the market right now. So this leads me into the second part of this podcast, guys, and this is going to be dedicated to those of you guys that are in the real estate business right now. Like I said, whether primarily as realtors, but this could probably help some of you lenders as well and title reps. And guys, the reality is these last 2 years in the market made a lot of people think that they were better than they are. I'm just going to say it how it is. There's a lot of people out there. You didn't have to have good skill. I'm going to be honest with you. If you were able to network a little bit, maybe you knew your neighbor, your sister, your cousin, whatever, and you put their house up for sale, you hardly had to do jack shit and the house would sell. I'm going to be honest with you. You put it up on the market. Anything was easy to sell in the last couple of years. You hardly had to do anything. And I think moving forward, guys, if you don't step your game up over these next 6 to 8 months, you're going to be gone. I think you're going to get left in the wind. We saw a lot of people enter the industry over the last couple of years because it looked great, looked fun. It was super easy to sell houses. But please understand that if you are a newer agent, what you have experienced in the last 2 years is not the normal for the market, right? You're going to have to up your seller conversation. You're going to have to learn how to price homes a lot more accurately. Before with the market being as tight as it was and housing prices going up like crazy, it didn't really matter almost what you listed at in some cases. You could just kind of get in the general vicinity and the market's just going to bid it up. That is going to be super important now as you go to price houses when you're competing against, you got 20,000 other homes on the market, strategically pricing a home and then understanding why you're priced there and understanding how you can command that price and understanding how when you get another agent that calls you and says, hey, where you come up with your numbers, why are you pricing in this way? Truly understanding why you're pricing that house where it is and being able to stand on that is going to be super important. Having the ability to have a network or a database of potential buyers, right? right? If you're a listing agent and you're out there trying to find deals for investors to keep your business going on top of the traditional business, you guys got to be a multi-versatile agent like you guys have heard me talked about in the past. If you're just an agent that's out there, hardly doing anything, you're going to struggle, guys. If you guys have like, oh, I only work with buyers, and oh, I'm going to list a house, and you don't have a way to market that, you don't have a system, you don't have a process, you don't have a database to market your homes to, you don't have a database of past buyers that you know what they're looking for, investors, potential landlords that are looking for investment properties, and you don't have a list of that to go out and help find them deals, you guys are going to struggle, I think, to be honest with you guys. For those of you guys that aren't creative, you guys don't know different ways of marketing and generating business. You don't know different ways of marketing your clients' homes out there. You guys are going to get ran over. I'm going to be very honest. I say this very bluntly because I do think it is going to get super competitive. But here's the thing. In these kind of markets where things level out, it creates a massive divide. The ones that know what the heck they're doing, and a lot of the agents that are experienced and have been in the market prior to 2020 did very well in a leveled out, balanced market, and they were at scale, they're going to dominate because they already have the systems and the processes in place to do well. They already know how to generate leads. They know how to market. They know how to do all of those things. If you're a brand new agent right now and you don't have a lead gen system in place, whether you're doing paid traffic, whether you're doing door knocking, whether you're doing mailers, everything, you guys are most likely probably going to get left in the dust. I'm going to be very honest with you right now. This is the benefit of aligning yourself with a brokerage or aligning yourself with a team that knows how to lead gen. They know how to show you how to win in a stagnant environment where things are leveling out or there's markets adjusting. Because again, if you're a solo agent, you've only ever experienced these last 2 years, it's going to look extremely different for this next year for you guys, and you're going to struggle. I say that very clearly in hopes that you guys go out and you guys try to find new ways to hone in your skills and survive in an environment like this, or go align your guys' selves with brokerages or with team leads that know how to win in this environment. They have the resources to win in these environments because it's going to be hard for you guys again. I get kind of excited because from an investor opportunity, for me, there's a lot of investment opportunities that are going to be out there. I think there's going to be some great deals out there. I think that it's good news for us agents that have been in the business for a while, or those newer agents that are 100% bought into their business and they're reinvesting in themselves and they're doing things right and they're actually building a true business, right? And what I mean by a true business is you have marketing channels in place, you have a CRM in place, you set up time to go network, you set up time to make phone calls, you set up time to go out and study data in the neighborhoods. That's a business. That's where you're not just sitting at home and waiting for somebody to call you or get a referral here and there and do a deal or two. You guys are going to get left in the dust in these next few months. I'm just telling you guys right now. Recommendation to survive would be, again, get out there and align yourselves with people that were in the business prior to 2020 that know how to win and know how to have the resources. Because again, it's really easy to get deals when the market's super hot and everybody wants to sell and prices are going so high that sellers didn't really, they just couldn't refuse the offer of what they're getting for their house. In a normal market, guys, it's all about your creativity and your ability to scale, your ability to create leads for yourself, your ability to stay consistent and put systems and processes in place to make sure that you could actually survive and thrive in a traditional, normal real estate market. So hopefully this is helpful for you guys. I just wanted to clear the air on this. Again, it's going to be an interesting shift. I'm looking forward to it. It was much needed. There's amazing opportunities out there. Again, guys, it's still a seller's market. Sellers, your houses are still going to sell. Don't worry. You just need to focus on pricing them right. Buyers, get out there. Now's your time to shine. We had so many buyers that were, getting beat out by hedge funds. And good news is, guys, as of right now, hedge funds have slowed way down. What does that mean? For those of you first-time home buyers, or those of you buyers that were shopping $450K and under, you guys have way less competition than you did before. Get out there now while you can. Lock in a house, get a deal, refinance into a lower rate later on down the road, guys. There's opportunities in every market. People don't just stop not having to buy, not having to sell, guys. Life happens, divorce happens, job transfers happen. People have kids move out. People still need to move in markets, guys. You guys have to understand that. It's just your job to get creative with it and find solutions for people that make the most sense to help their families. Again, the creativity is going to come in massively on this. So hopefully this was helpful for some of you guys. Again, if you guys ever have any questions, I'm always free. Find me on social media, Blake Sells AZ. You guys can find me on Facebook. Drop me a DM, call, text. I'm always happy to answer any questions you guys may have. And as always, guys, get out there, crush it.